Bitcoin appeared suddenly. It arrived like a whisper in 2009. Its creator, known only as Satoshi Nakamoto, remains a mystery. Yet this digital invention quickly started a global conversation. People were curious. What was this new form of money? It wasn't printed by governments. It wasn't controlled by banks. It was something entirely new, born from computer code. This challenged everything we thought we knew about currency and trust. It was a bold idea, a digital currency for a digital age, promising a different way to handle value. So what exactly is Bitcoin? Imagine it not as physical coins you can hold. Instead, think of it as pure digital information. It's a system, a network, and a currency all in one. At its heart is a shared public ledger called the blockchain. This ledger records every single Bitcoin transaction. Think of it like a massive global spreadsheet that everyone can see. However, no single person or company owns or controls this spreadsheet. It's maintained by a distributed network of computers around the world. This transparency and shared control are fundamental to its design. The creation of Bitcoin wasn't just a random event, it emerged from a desire for a financial alternative. Many believe it was a response to the 2008 financial crisis. That crisis shook people's faith in traditional banking systems. There was a growing call for something different, something that didn't rely on the decisions of a few powerful institutions. Bitcoin offered a system built on mathematical proof and cryptography. Its open-source nature meant anyone could inspect its code, anyone could participate. This invited collaboration and built a community around its principles. The excitement surrounding Bitcoin is multifaceted. It's more than just a new way to send money. It represents a groundbreaking technology, much like the internet in its early days. The potential seems vast, stretching beyond simple payments. People are drawn to its promise of financial sovereignty. Investors see an opportunity in a new asset class. Technologists are captivated by its elegant solution to the double spending problem without a central authority. It symbolizes freedom, innovation, and a shift in how we perceive and manage value in an increasingly interconnected world. One of Bitcoin's most powerful features is its decentralization. This means no single entity controls it. There's no central bank to print more Bitcoins. There's no CEO making decisions. Instead, Bitcoin operates on a peer-to-peer network. Thousands of computers across the globe voluntarily run the Bitcoin software. This distributed nature makes the network incredibly resilient. If some computers go offline, the network continues to function. Governments or corporations cannot easily shut it down or censor transactions they don't like. It's a currency powered by its users, for its users. Security is another cornerstone of Bitcoin's design. How safe is your Bitcoin? The system uses strong cryptography, a branch of mathematics, to secure transactions and control the creation of new Bitcoins. Think of your Bitcoin wallet as a digital vault, protected by private keys. Only you, with your private key, can authorize a transaction. Once a transaction is confirmed by the network and added to the blockchain, it becomes practically immutable. It's extremely difficult for anyone to alter or reverse it. This robust security is built on mathematical principles, not on the trustworthiness of a third party. Bitcoin also offers a unique kind of transparency. Every single transaction is recorded on the public blockchain. Anyone, anywhere, can download the Bitcoin software and view this ledger. You can see Bitcoins moving from one address to another. However, these addresses are not directly linked to real-world identities unless users choose to reveal them. This creates a system that is transparent in its operations but can offer a degree of pseudonymity for its users. This openness builds trust, as the rules of the system are clear and verifiable by all participants. Finally, let's talk about Bitcoin's limited supply. Unlike traditional currencies which governments can print at will, Bitcoin has a finite supply. There will only ever be 21 million Bitcoins created. This scarcity is hard-coded into the protocol. Governments often print more money to manage their economies, which can lead to inflation, devaluing the money in your pocket. Bitcoin, by contrast, cannot be inflated away by a central authority. This characteristic has led many to see it as a potential store of value, similar to digital gold, protecting wealth from erosion over time. Bitcoin's real-world uses are steadily expanding beyond speculation. People are increasingly using Bitcoin to purchase goods and services. Many online retailers now accept it as a valid form of payment. You might even find local coffee shops or businesses that welcome Bitcoin. For international payments, it offers a compelling alternative. Sending money across borders using traditional banking can be slow and expensive, riddled with fees. Bitcoin transactions can be faster and significantly cheaper, especially for larger sums, bypassing intermediaries and their associated costs. It simplifies global commerce. Beyond everyday payments, Bitcoin is gaining traction as a store of value. Some individuals and even institutions view it as digital gold. In countries experiencing high inflation or economic instability, Bitcoin can offer a lifeline. It provides a way for people to protect their savings from being devalued by government policies. It acts as an accessible hedge against the risks inherent in traditional financial systems. For those seeking an asset uncorrelated with stocks or bonds, Bitcoin presents a novel option for wealth preservation. It's a way to opt out of a system they don't trust. The future of finance could be significantly reshaped by Bitcoin and its underlying technology. It has the potential to make financial services more inclusive. Billions of people around the world lack access to basic banking services. Many of them, however, have access to a smartphone. Bitcoin doesn't require a bank account, just an internet connection. This could empower individuals in underserved regions, giving them access to global markets and financial tools. Consider remittances, for example. Migrant workers could send money home to their families with much lower fees, ensuring more of their hard-earned cash reaches its destination. The impact of Bitcoin's technology, the blockchain, extends far beyond just currency. Imagine secure and transparent voting systems built on a blockchain. Consider managing your digital identity in a way that you control, not a corporation. Smart contracts, which are self-executing contracts with the terms of the agreement directly written into code, could automate and simplify countless legal and business processes. The innovation sparked by Bitcoin is not just about creating a new kind of money, it's about developing a new infrastructure for trust and information exchange in the digital age. Engaging with Bitcoin now, even in a small way, can be compared to exploring the internet in the early 1990s. It is still a relatively young technology, full of both promise and challenges. Being an early adopter often comes with risks, but it also presents the opportunity to be part of a transformative journey. Understanding Bitcoin today is an investment in your financial literacy for what could be a very different future. The learning curve itself provides valuable insights into the evolving landscape of money and technology. The knowledge gained is an asset in itself. From an investment perspective, Bitcoin can offer diversification benefits. Financial advisors often say, "Don't put all your eggs in one basket." Bitcoin represents a new asset class that often behaves differently from traditional investments like stocks, bonds, or real estate. Its price movements are not always correlated with mainstream markets. This means that in certain economic conditions, it could add a layer of resilience to a well-rounded investment portfolio. It offers an alternative path, particularly when traditional financial systems face uncertainty or volatility. Investing in Bitcoin can also be seen as more than just a financial decision. For many, it represents a vote for a different kind of financial system. It's a statement in favor of decentralization, transparency, and individual empowerment. By participating in the Bitcoin network, you're supporting an alternative to opaque, centrally controlled financial institutions. It's a step towards a future where individuals have more control over their assets and financial destinies. It embodies a philosophical shift towards user-controlled finance and open protocols. Ultimately, the journey into Bitcoin is one of continuous learning and discovery. The technology itself is fascinating, touching upon cryptography, economics, network theory, and game theory. Even a modest engagement with Bitcoin can be an incredibly educational experience, broadening your understanding of how value can be created and exchanged in a digital world. The future is undeniably digital, and Bitcoin is at the vanguard of this financial evolution. Considering its potential now allows you to be an informed participant,